Welcome back. The Tax Working Group has ruled out introducing a new capital gains tax.
But as Emma Jolliffe reports, it has a few other ideas on how to get those who earn money off property and shares to pay more tax.
The Tax Working Group, chaired by Sir Michael Cullen, isn't calling it a capital gains tax, but its proposals would involve taxing capital gains.
There's not a separate capital gains tax regime. It's part of the broad income tax system. How that would work in practice will depend on a lot more work to be done, so I can't give you a clear answer.
He says if person 1 earns $100,000 in just wages and person 2 earns $50,000 in capital gains off an investment property or other assets and $50,000 in wages, person 2 is paying a lot less tax. The working group says that's not fair.
I thought that was an interesting part of their proposal, was to not in fact propose a new tax, but rather an expansion of the definition of income.
Broadening that definition could mean taxing capital income on land or property interests outside the family home and shares. Gains would be taxed at an individual's personal tax rate. But National says that's a disincentive for New Zealanders to invest.
The government has got no justification for new taxes. They've said themselves today, the tax system is not what's driving housing affordability, and yet they've come out and said we still want to come after capital gains.
The government says it's about creating a fair tax system. Some things are off limits for the working group. The family home, increases to income tax and GST and inheritance tax. The working group will make its final recommendations in February. Emma Jolliffe, Newshub.